Here is the overview you really need to understand if you are trying to understand a single member LLC taxed as an S corporation. So the big question is, can an LLC be taxed as an S corporation? Well, yes. Navigating taxes for your LLC can seem like a very kind of complicated process. So when we talk about LLCs, there are two types of LLCs, very important. So a member of an LLC is kind of similar to a shareholder in a corporation. With respect to members, there are two types of limited liability companies. So we have LLCs, right? So we have a single member LLC. So this is an LLC with only one member who is basically the sole owner of the business. And then you have multi-member LLC. So this is an LLC with two or more members. And basically under this structure, members can share equally in the profits or losses of the business and can share in different proportions as determined by the LLC operating agreement. So it doesn't have to be 50-50 all the time. So let's talk about electing the LLC tax filing status. Both single-member LLCs and multi-member LLCs can elect to be treated by the IRS as either a C corporation or an S corporation. This election requires filing of IRS Form 8832, which basically must be done no later than 2 months and 15 days after the beginning of the LLC's tax year. So we're speaking about 75 days. And it's really important to follow procedures here. If you form a single member LLC and do not file any special form with the IRS, the LLC will be taxed as what the IRS calls an entity disregarded as separate from its owners, meaning that it will be taxed as if it were a sole proprietorship. If you form a multi-member LLC and don't file any special form with the IRS, the LLC will be taxed as if it were a partnership. In other words, you have to file Form 1065. So no matter what you have, what kind of structure you have, if you have a single member LLC or a multi-member LLC, you can choose to have it treated as an S corporation by filing IRS Form 2553, election by a small business corporation. So if you file Form 2553, you don't need to file Form 8832 as you would for a C corporation. So this is the only distinction you need to have. So as today's conversation revolves around S corporation, so the quintessential form to really have in mind here is Form 2553. So let's talk about how does a single member LLC file taxes. By the way, welcome back to the channel. Really appreciate having you here. In today's conversation, we are talking about single member LLC taxed as S corporation. So let me just quickly answer the question. So if your LLC is taxed like a sole proprietorship, you will report the LLC profit or loss on your individual Form 1040, along with either Schedule C, profit or loss from business, that's for a sole proprietorship, Schedule E, supplemental income or loss, or Schedule F if you are in the farming business. So Schedule F is basically profit or loss from farming, depending on which schedule is appropriate for your type of business. Okay, and if you have elected to have your LLC taxed as an S corporation, the LLC will need to file Form 1120S. So this is important. This is a U.S. income tax return for an S corporation. And it's really important to understand that the LLC is a pass-through entity. In other words, the LLC itself pays no tax, but the profit or loss will be reported by you on your individual Form 1040, along with Schedule K1, shareholders' share of income, deductions or credits, etc. You will need to actually pay taxes on any profit, regardless of whether the LLC actually passes on to you. So how do you actually elect S corporation status? Well, similar to how a corporation elects S corporation status, a single member LLC can become an S corporation by filing what? Form 2553. That's the main form, okay? And it's important to understand that when you file Form 2553 and you will become an S corporation. Certain aspects of filing S corporation status can be really complicated, such as determining a reasonable salary, setting the right time for the S corporation to go into effect, and there is extra administrative paperwork also. So to ensure smooth filing, we recommend that you work with a certified public accountant, an enrolled agent, or a tax attorney who really understands the particulars of the specific industry you're in. Because I mean, here we are giving you general information. It's good to hear, but if you have a complicated tax structure, or if you have a complicated, I would say, some kind of accounting that is a little complicated, it's just always better to hire an expert. And remember, a tax expert does not cost you money. He or she saves you money. So let's dig a little deeper here and try to understand, how does an S corporation get taxed? This is really important now. Like LLCs, S corporations are pass-through entities. That means they don't owe any taxes at the corporate level. Instead, earnings from the business flow through to shareholders according to the percentages in the operating agreement. So basically what will happen here is that you have a pass-through entity. So basically, when you file 1120S, Form 1120S, this is called an information return. So you don't pay any taxes at the company level, okay? And then, so you have to file 1120S along with the appropriate Schedules K1. So if you have one or two members, one or two shareholders in the corporation, you have to file two Schedules K1, okay? Each shareholder must then pay federal and state income taxes on the amount distributed to him or her, after accounting for individual reductions, like contributions to traditional retirement accounts and the standard or itemized deductions. However, they don't have to pay self-employment taxes on the S corporation's net earnings. Instead, S corporations must treat their owners as employees and pay them a reasonable salary. This is what I was talking to you about earlier. Okay, only those wages are subject to the FICA payroll tax. In addition, and this is important to really remember also, the S corporation and the business owner split the 15.3% tax, with each picking up 7.65% on their returns. As a result, you avoid paying FICA taxes on the rest of the S corporation's net earnings distributed to you. And so basically, when you think about it, this kind of scheme really is kind of cool, right? And one might think that this will incentivize naturally everyone, including you, to pay yourself as low a salary as possible to minimize your self-employment taxes. However, that will get you in big trouble with the IRS, because the IRS wants you to make sure that you pay yourself a quote-unquote reasonable salary. And the IRS will not hesitate to call you on this, okay? There is some inherent subjectivity to these requirements, but an easy rule of thumb is to pay yourself a wage equivalent to the market rate for the services you provide your company. For example, let's say you are a freelance bookkeeper and your S corporation generates $90,000 in net earnings. In your city, a bookkeeper with your experience level typically earns $65,000. So you pay yourself an equivalent salary and take the rest as distribution. Okay, this is important. So don't pay yourself, for instance, 35 grand, while everybody else in your city is getting paid $65,000. No. Let's talk about how an LLC being taxed as an S corporation works, like for real. The thing what will happen here is that if you would like to have your LLC taxed as an S corporation, you will follow the same taxation rules outlined earlier. In other words, you have to pay yourself a reasonable salary subject to FICA and income taxes. Then you have to pay income taxes on distributions of the remaining profits. Okay, so those are two important things. Obviously, it's important to actually take care of the paperwork, right? The admin part is really quite essential, because the IRS is going to, God forbid, if they were to audit you, you want to make sure that you have you have an effective, I would say, record keeping process in place. Okay, to be taxed as an S corporation, as I said earlier, you must complete and file IRS Form 2553. Okay, so to qualify for the tax treatment during a tax year, you generally must do so no later than 2 months and 15 days after the start of the year. So we're speaking here about 75 days, 75, 77 days, give or take, 75, 76 days, give or take, okay? For example, if you are using the standard calendar year, you must complete and file Form 2553 by March 15th. Alternatively, if you started your business partway through the year on June 1st, you would have to wait until August 15th. And so this is just like some basic timing issues that the IRS pays attention to. If you make the election on time, your LLC will receive S Corporation tax status for the entire year and all future tax years unless you file additional paperwork to revoke the election. Yes, you can basically elect but also revoke the election. Not a problem. And one thing I want to say here is that if you elect to have your LLC taxed as an S Corporation, your legal business structure is still technically an LLC. I think I might have said it somewhere that basically an LLC, an S Corporation rather, an S Corporation is an IRS construct. It is a tax construct. Okay, there is nowhere in this country where you can actually organize or incorporate as an S corporation. No, like if you're in New York or California or Illinois, whatever, you cannot. It's not in the list. It's not in the checklist. It's not in the checkbox. You cannot, but you can actually organize as an LLC. But for tax purposes, you become an S corporation. Okay, and it's important to remember that when considering issues like personal liability protection, think about specific state requirements also. Let's talk about the requirements for an LLC to be taxed as an S corporation. By the way, folks, I just want to remind everybody that in today's conversation, we are talking about single member LLC taxed as an S corporation. So for an LLC to be taxed as an S corporation, you must meet some fundamental IRS eligibility requirements in addition to filing the forms as discussed earlier, so Form 2553. But once you file that form and the election is granted to you, you're going to have to actually abide by certain requirements. So the eligibility requirements that I'm talking about, they are initial but also ongoing. Okay, so this includes the following. So you gotta be a domestic entity. So your LLC must be a domestic entity. In other words, you must be operating here in this country. You can't be overseas and actually claim and actually elect to be taxed as an S corporation. You must have the LLC, that is, must have only allowable owners. So what are the allowable owners? So they may be individuals, certain trusts and estates. They may not be partnerships, corporations, or non-resident alien owners. So this is where I was just talking to you earlier about the fact that S corporation has a lot of benefits, but you also have some stricter requirements. And the LLC must have no more than 100 owners. So the maximum here is 100. And the LLC must have only one class of stock. So for LLCs, all owners must receive equal rights for distribution and liquidation. And the LLC must not be an ineligible entity. For example, certain financial institutions, insurance companies, and domestic international sales corporations cannot be S corporations. So all I want to say here is that if you want to learn more about those eligibility requirements, you can talk to a tax expert, or you can just read IRS instructions for Form 2553. I think the IRS does a great job explaining everything at length. So if you want to know more about those eligibility requirements, please go back and read that form. So the big question is, should you choose an S corporation status for your LLC? It really depends on you. And it depends on your tax structure. It depends on your tax planning strategy. It depends on the accounting fundamentals of your business. Okay, choosing to elect S corporation status for your LLC often comes down to a simple calculation at lower incomes. If you will save more money from the tax benefit of the election than you will spend on the increased cost to maintain the entity, is often worth it. Remember, there are some inherent costs that are associated with maintaining your status as an S corporation, because the IRS will call you out if you do not comply with the basic rules. And so one thing I want to say here is that the decision becomes increasingly complicated the higher your earnings, and the higher your earnings are, and the more income streams you have. For example, if you have W-2 wages from a job with another employer, it may reduce your self-employment tax savings from electing S corporation status. Ultimately, Making changes to your small business's tax treatment is a significant decision and can have repercussions beyond the scope of this program, of this show. As a result, as I said before, it's always better to consult with an expert. Please talk to a CPA, talk to a tax attorney, talk to an EA, an enrolled agent, talk to a tax planner, somebody who has expertise in the kind of sector you're in. Big decision time. So, are you thinking about choosing an S corporation status for your LLC? Have you done the homework? First of all, do you qualify? Does your LLC qualify? Because I've given you a constellation of criteria that your LLC must fulfill before qualifying. Does your LLC qualify? And are you thinking about it? And have you thought about timing? Because as I told you before, you have the 75-day mark that you need to fulfill before actually receiving that election. So, do you have? Are you ready to spend more money on record keeping? So those are things I want you to think about if you want to choose an S corporation for your status, because it comes with a lot of benefits. That's true, but also comes with some stringent requirements. Speaking of benefits, I just want to quickly talk to you about, the benefits of electing S corporation status. I mean, the thing is, a lot of folks are interested in those benefits, and I want to really dig a little deeper here. So, an LLC has the option of electing S corporation status, but it must meet the requirements I spoke about, right? So, similar to a sole proprietorship, an LLC, an S corporation has a pass-through tax structure, meaning that its income taxes will pass through to its owners to be reported and paid at the individual level. And everything happens on Schedule C. So by doing so, it basically enables the business to escape the double taxation problem that affects C corporations. In addition, an S corporation keeps its owners separate from the company, allowing them to be treated as employees and withholding payroll taxes from their incomes. It is beneficial for an LLC to elect S corporation status if it is profitable and its owners are required to pay large amounts of self-employment taxes, such as Social Security and Medicare taxes. As the owner of a single-member LLC with the S Corp status, you are not regarded as a self-employed person. Therefore, you don't have to pay federal self-employment tax. However, since you are regarded as an employee, you have to take some or all of your company's available profits as a salary. You can then take the remaining profits as a dividend to avoid employment-related taxes and double taxation. And if you are a single-member LLC with disregarded entity status, you are required to pay self-employment taxes. By electing S corporation tax status, you will be able to avoid self-employment taxes on the money you receive as dividends. Let's talk about the disadvantages of an LLC being taxed as an S corporation. Well, there are a few potential drawbacks. So you have retirement contributions. So filing as an S corporation instead of an LLC may reduce the amount you can contribute to some of your tax-advantaged retirement accounts. You have higher tax preparation fees because filing as an S corporation requires an additional income tax return for your company. You will usually pay an accountant more to complete your taxes each year. And you also have the reasonable salary mistake. So the IRS can decide the salary you paid yourself was not high enough and reclassify some of your distributions to wages after you file your return. So this will increase your S corporation tax liability and may cause you to owe back taxes, penalties, and interest. So most drawbacks of having your LLC taxed as an S corporation come from increased paperwork and complexity. There are more moving parts to consider, which may cost you additional time or money. And let's talk about the reasonable salary that I actually talked about it superficially a few minutes ago. I want to come back to it. I want to dig a little deeper here because it is paramount. It is of paramount importance when we talk about S corporation. You may be tempted to receive all your money from your company as a dividend so that you can avoid self-employment taxes altogether. Nonetheless, the IRS prohibits this approach by requiring you to pay at least reasonable compensation to yourself as salary. Knowing how much compensation is reasonable can be difficult. So the IRS has actually listed 10 factors for determining reasonable compensation. And some accountants will use a 60-40 rule, which requires 60% of profits to be received as salary and the remainder as dividends. Okay, so when we talk about paying yourself reasonable compensation, it's important to understand that the IRS uses their own criteria, the 10 factors, but also they pay attention to some online platforms such as salary.com or Glassdoor or whatnot. Okay, so the IRS typically scrutinizes distributions by an S corporation to a shareholder employee to ensure that the corporation is not avoiding the payment of employment taxes by disguising compensation payments as dividend distributions. Okay, one thing I want to say here is that you have to understand non-wage distributions by an S corporation to a shareholder are not subject to self-employment or payroll taxes. So an IRS audit of an S corporation return will typically focus on whether reasonable compensation has been paid to shareholder employees and whether the appropriate amount of employment-related taxes have been paid. So this is important. So you have a lot of so some factors used by the IRS to determine reasonable compensation include training and experience, duties and responsibilities, time and effort devoted to the business, dividend history, payments to non-shareholder employees, timing and manner of paying bonuses to key people, what comparable businesses pay for similar services, compensation arrangements, the use of a formula for determining compensation, and amounts paid out as salary compared to the amount distributed as profits. So those are things that the IRS pays attention to. But there are a lot of ways, but as you can see, the whole thing here is that an S corporation comes with more paperwork. That's all it is. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you quickly about SingleMember LLC taxed as S corporation. So we spoke about electing the LLC tax filing status. How does a SingleMember LLC file taxes? How to elect S corporation status? How does an S corporation get taxed? How an LLC being taxed as an S corporation works? Requirements for an LLC to be taxed as an S corporation? Should you choose an S corporation status for your LLC? The benefits of electing S corporation status, the drawback of doing so, and determining quote-unquote reasonable compensation. Thank you so much. I'll speak to you another time, but until then, remember, stay marvelous.